Hello dear traders, as usual we begin our trading day with a recap of the Asia-Pacific trade. In the recent 8 days, financial markets, regardless of the continent, are trading mainly in tune to geopolitical news. Now let's figure out what sentiment prevails in the Asian session today. Global markets have been hit by investors' exodus from a risky asset since Russia unleashed its intrusion of Ukraine. Stock markets are also hurt by massive selling. Apart from this market catalyst, investors should not neglect fundamental domestic issues, which are the same around the world. A lot of countries are facing a slowdown in economic growth, sluggish employment and a high inflation. The immediate consequences of the Russia-Ukraine crisis for the US is a soaring energy prices amid runaway inflation. Though Jerome Powell delivered a cautious message in his testimony in Congress, the rate hike in mid-March seems to be a settled question. So the US stock market closed in the red yesterday. The S&P 500 shed 0.5%. The convincing winner is the US dollar, which is a preferable safe haven asset in the time of geopolitical and economic turbulence. Its index has surpassed the highest level in 20 months. Some analysts warn that the greenback might set a trap as a safe haven asset. This is what happened with Russia that has lost access to its forex reserves. Nevertheless, the US dollar is still winning favor with investors. Today, its index is trading at 98.04. The greenback could climb higher, trading in the corridor between 97.84 and 98.08. Most Asian stock indexes are trading lower following a retracement on Wall Street. Japan's benchmark Nikkei fell 2% to a 15-month low. Sell-offs affected all sectors. For example, Toyota stock slumped 2.8%, citing snags in supply chains. The Japanese auto giant suspended its production facilities from Friday in St. Petersburg, the second largest city in Russia. Today, Asian markets are trading quietly. As a result of the retracement in the US and Japan stock markets, the dollar-yen pair also reversed downwards. So the greenback failed to win advantage over the yen and the currency pair closed 6 pips down. Market sentiment is still unclear on this trading instrument. On the one hand, investors are regaining the risk-on mood, hence they could be poised to buy the dollar-yen pair and stocks again in a case of upbeat US non-farm payrolls, which are released later today. On the other hand, encouraged by robust employment, the Federal Reserve could decide to raise the funds rate by 50 basis points at a time in March. If so, investors will again rush to sell shares. What strategy will market players choose? We will see it after the publication of the non-farm payrolls. Meanwhile, the dollar-yen pair is following the main scenario, drifting to 116.35. Currently, the pair is trading in the green at 115.44, inside the corridor between 115.23 and 115.55. The alternative scenario is the pairs decline below 115.07 in parallel with the stock market aiming for 113.36. The Australian key stock index is printing losses today, having reversed after yesterday's climb. The index dropped 1.7%. Notably, even stocks of energy companies are trading in the red. The high-tech sector is the worst performer. Market pessimism worsened on Friday in light of the news on the Russian attack on the Ukrainian nuclear power plant, which is the largest in Europe. European consumers are searching for replacement for Russian suppliers. It propelled a rapid rally in commodity markets. And this rally is bullish for the Australian dollar that has risen by 31 pips. At the same time, the US dollar is also flexing its muscles. As a result, the greenback is holding the upper hand over its Australian rival. The US dollar index has gained 1.18% for the last 4 days. The Aussie has climbed just 0.89% for the same time. Now the currency pair is holding at 0.7351, trading sideways between 0.7302 and 0.7364. The US non-farm payrolls matter a lot for the US dollar, like for a further dynamic of the AUD and the yen. Analysts expect strong employment data with 400,000 new jobs created in February. And this prediction is based on the fact that US unemployment claims have been going down in the last 6 weeks. The main scenario for the AUD-USD pair is attempts to settle below 0.7291 and a further move down towards 0.7227. And this is the wrap-up of the final Asian session this week. I hope you've had an efficient trading week, benefiting from our news. Welcome to leave your comments, and our analysts are always ready to answer all your questions. Trade at profit with the InstaForex, and see you soon.